I'm WBZ political analyst Jon Keller. The Federal Reserve just cut its key interest rate for the second time in as many months. So, what does that mean for our economy, or more importantly, your economy? Joining us now from Heritage Financial is CEO and President Sammy Azzouz. Sammy, welcome. Thank you for joining us.
Thank you for having me.
So, a 0.25% cut drops the key interest rate in a range of 3.75 to 4%. What does that mean regarding inflation?
Yeah, it's more to support the labor market, really. The Fed has a dual mandate: price stability, which is keeping inflation in check, and then maximum employment. And right now, inflation is above the Fed's desired target. So this does reflect more concerns that the labor market is weakening that they wanted to address.
Is this enough to turn that around? It seems like layoffs are in the news every day.
It's possible that the Fed would have acted in a bigger capacity if they were more concerned about the labor market. And again, as I pointed out, inflation is above their target.
Hmm.
So this does allow them to act, and it's something the market had been expecting. But I'm not sure it's reflective of significant concerns that would have driven a bigger cut.
Now, there's been some eyebrows raised about the fact that the central bank officials were forced to make this call without the usual federal economic data due to the government shutdown. Does that really matter? Or, I mean, are they flying blind here, or do they know what they're doing?
I do think the lack of data is a real concern, and that's something investors are going to want to dig into to understand how the Fed reached its decision. But I think that's going to be maybe a concern more so going forward than for this meeting. Investors were expecting this cut. It was highly telegraphed from the Fed. So I think the lack of data is going to be more of an issue going forward.
Yeah, what was the market's response so far today? We're talking in about an hour or so before the markets close.
Yeah, it initially held up, but then it sold off a tiny bit. And I feel like that is more a reaction to Chair Powell's statement that the December rate cut, which the market was expecting, isn't now a foregone conclusion, which he shared after the news of the cut came out.
So you seem cool, calm, and collected. How does this leave you feeling about the economy in general and the market in particular?
Yeah, the market's done very well. I would say a recession isn't in anybody's short term base case, but there are concerns with the labor market. The Fed is addressing those to a certain extent. If they were more concerned, they might be a little bit hamstrung because, again, inflation is above their target. So I think that this is something the market was expecting, and I feel like it is reasonable to stay cool, calm, and collected in an environment like this.
Hmm. One last thing, Sammy. At some point, I guess the shutdown will end. What do you see as the likely impact of it ending?
Historically, any kind of economic loss during a shutdown has been made up in the quarter when the shutdown was over, or the next quarter if it ended kind of late in the quarter. And that's what people are expecting, that will rebound and will catch up on that economic activity. If this shutdown is different, and there are signals that it is in terms of broader layoffs from the government instead of furloughs, then the economic impact could be deeper than past shutdowns.
Sammy Azzouz is CEO and President of Heritage Financial. Sammy, thank you so much for joining us.
Thank you for having me.
I'm Jon Keller. Thank you for watching.